It was indeed a turbulent start to the new trading week for U.S. stocks, losing more than 1%. This on growing debt concerns in both the Eurozone as well as the United States. Now, first we took a look at today's economic reports. It was a little bit on the light side, with only released today the NAHB Housing Market Index, which did rise to a reading of 15 in July from 13 in June. However, that slight bit of positive news was not enough for investors to have the 5, 4, 3, 2, 1. It was indeed a turbulent start to a new week for U.S. stocks, this time led by growing debt crisis concerns in the Eurozone as well as the United States. Now, first, in today's economic reports, the docket was light. As only released, we had the NAHB Housing Market Index, which did improve to a reading of 15 in July from 13 in June. However, that was not enough in order to get the markets out of the current funk, as growing debt crisis concerns regarding the debt ceiling in the United States, as well as debt crisis concerns in the Eurozone, led the way for the Dow Jones to take quite the hefty hit today. Now, you team that with a surge in the US dollar. Oil prices once again trading at milestone highs at $1,607.90 an ounce, and it looked once again to be definitely a down day for the Dow Jones. And of the 2.9 billion shares trading today, roughly 91% in the red and 9% in the upside. Now, we first take a look now at how the Dow Jones has closed out today's trading session. The Dow on the downside, after falling more than 170 points, it settled at negative 94.57 points to settle in at 12,385.16. Now, in a breakdown of today's major market movers, we first begin with shares of Apple, and its stock surged more than 1% higher. This on news that the U.S. International Trade Commission has ruled last week that HTC infringed on 2 Apple patents. Meanwhile, shares of Charles Schwab losing nearly 2.5%. This despite the banking services company topping second quarter profit estimates by roughly 1 cent, and the shares of IBM right now trading relatively flat as investors are awaiting the post-closing bell release of its earnings report, and they are expecting the earnings to come in at $3.03 a share on sales of roughly $25.35 billion.